Hey guys, this is Chad Keiser, and we're going to get started in just a few minutes here. So once again, thanks to everyone for joining us on our call today, and it's so great to be able to connect with all of you on today's call. So I see lots of familiar names on the webinar page, so thanks to all of you for making this call a priority. This is great, guys. Okay, you're really going to like this. I don't normally make these presentations like this, but I had to let you know about something I really think you can immediately use in your business, and it will also help you plan for your future. Now, I know you're busy running your businesses, so I won't take a lot of your time, but I will make you this promise. You are going to learn some insider secrets on how my friends have been tripling the profits of companies that they acquire. And that's right, I said tripling. So a question a lot of my clients, people just like you have been asking me lately is how they can grow their business and sell it for a lot more than it's worth today. Well, I've had the great fortune of meeting a team of international experts that know how to grow companies quickly without breaking the bank and then set those companies so that they can be sold for a very high multiple, assuming that the owners want to do that, or even take the companies public through a hybrid IPO process. Do I have you intrigued yet? Well, I do have great news. I was able to get Mike, the CEO, to show you even more than what he has shown me. I've arranged a special training session with Mike where he's agreed to show you how any company, regardless of their industry, can triple their profits. Yes, 3x in just 18 to 24 months. And if you want to learn how to do this, then sell it, well, he has agreed to show you this as well. So I personally think that you'll love what Mike is about to share with you. You may be looking to grow your business right now, and I'm sure you would like to know how to triple the profits in a very short period of time. Others might want partners to come in and do it for you, and another group of business owners may want to exit from their business altogether in the next couple of years, but want to make sure that they get an even higher multiple than that they could get right now. So regardless, it doesn't matter. Whatever the circumstances are where your company is right now, I'm sure you'll walk away from today's presentation with a ton of knowledge and some great ideas that could be implemented immediately. So even if you don't want to sell your company, I'm certain that you want to learn how to triple its profits in just the next 18 to 12 months. Imagine what that would feel like, guys. I also want you to stick around for some Q&A at the end. So if you have a burning question, you can enter them into the question and answer box that you see right there in front of your screen, and we'll do our best to answer all of those at the end. So this is part of what we have to do here, go over some disclaimers. We're not business brokers looking to list your business for commission. That is not what we do. Mike's team is a group of business buyers and growth hackers, which means they know how to make companies grow and grow fast. So let's go ahead and officially start. So I'm really excited that you're here on this call and have a chance to meet Mike Warren. Mike and I have known each other for a long, long time, and he's going to share some strategies with us today that are revolutionary. We're all looking for some simple ways of creating cash flow and putting money in the bank that doesn't require a lot of effort or a lot of cash up front. So folks, please pull out a pen and paper. Please take notes on this. Okay? If you've got a lot of background noise, close the door if you can. And if you're going to want to take really strong notes on this call, so go ahead and do that. Plus, when I mute my phone, hopefully it's going to make the audio sound even better for everyone. So Mike, I think this has been a long enough intro, so I'm going to just go ahead and hand it over to you. Here you are, my friend.
Well, thank you very much, Chad. I'm also really looking forward to helping everyone grow their businesses and also possibly exit from it at top dollar. So let me just go ahead and adjust my headset, and we'll get started here. So everybody hang on for just a second.
Hi, and welcome to the Exit Formula and how to successfully exit your business at a 10x multiple of your current annual profits. What we're about to share with you is perfect for marketing agencies, IT services, staffing agencies, and software as a service type of business. Let me take just a moment and share with you who this is not for. It's not for startups. It's not for companies that are in bankruptcies. It's also not for companies without good growth potential. And it's not for owners who are unrealistic and overvalue their business. And it's also not for owners who think they can do it all by themselves, because if they can, well, there's no reason for them to be on this call to begin with. So let me ask you a quick question, and if you would give just a little bit of feedback in your question and answer box in your chat box there, I'd love to get some feedback from you. What do you see as your biggest obstacle to selling your business right now today? I'd really like to know. So if you would take just a moment and share with us what you see as your biggest obstacle. And it could be pretty much anything that you want. We'll give you some ideas of where companies typically get stuck when they think about exiting out of their company or selling their business or thinking about it somewhere in the future. So you may not be interested in selling your company right now, this moment. It may be something that you're planning somewhere down the road. But I'd like to know what you think is your biggest obstacle. A big issue that we see a lot of times with companies that we're interested in assisting is that the owner, you in this case, need to be involved in the day-to-day business, in the operation of your business. So a lot of people get to be not quite a one-person show. They may have lots of employees around, but they are the key person that makes the decisions in the business, and they have to solve the problems. So some symptoms that you have this type of problem is, think about it this way. Does this sound like you? You're constantly putting out fires at work. You are often working in your business instead of on your business. You're working 50 plus hours a week, or you can see, hear, and feel the warning signs in your business and your personal life that there's a problem, that things need to change, that you're not getting the fulfillment that you thought that you should from your business. And here's another question, and please use your chat box for this as well. What do you need in order to 3x or triple the profits of your business in just the next 12 months? So I'd like to know what you think it is that you need. Some people it's marketing, some people it's money, some people it's staffing, some people it's automation. It could be a different thing, it could be a combination, it could be all of those, I'm not sure, but I'd like to hear from you what you would need in order to triple your business in the next 12 months. So I'd like to have some feedback from you on that. And I see that we're getting, some people are saying actually all four, some marketing, some are staffing. So we're getting a couple different responses. So that's cool. I appreciate the feedback. And keep in mind, all of your information and your comments are confidential. So let me share with you what our promise is for today. We're going to show you how you can 3x your profits, how to cash out now and still own your company. That's a very interesting concept. I'll explain that in a little bit. How to get cash for your business today. How to gain credibility for expansion if you want to really expand your business. And ultimately, how you can sell your business for 10 times more than it's worth today right now. Because you're about to be part of the biggest business on earth. And that's really the business of buying and growing companies where you can take your company really to the next level. And we as entities are a group of private equity investors that acquires, grows, and sells companies for a profit, and you'll see how in just a minute. So I'm going to give you a little bit of my backstory. My name is Mike Warren, and I'm a best-selling author. I've written 3 international #1 best-selling books. I've been in the private equity business for over 10 years, actually since the 90s to be exact. And I've been involved in many different acquisitions, helping companies grow and consulting with them, and really creating lots of revenue and value for the stockholders or the owners. We've actually, as our group as a whole, we've done 51 now, 61, because I'll get into talking about that in a minute of what we've done, do IPOs or variations of IPOs. We've helped companies in the lighting industry, marketing agencies, IT services, health, medical, legal, software as a service, accounting, trucking, e-commerce, staffing companies, and more. So we've been around for quite a while. We provide growth and value for the business owners, as well as helping them create the exit plan that suits their needs, both personally and professionally. Whoops, went the wrong way there. So really, it's an idea of taking your company to the next level. And you may agree with me that the richest people in the world all own companies, and they've done it where they've taken their company to the next level. So it's not a case of having a small to medium enterprise or an SME, which more than likely that's what you are. If you're under $10 million, you're an SME or small to medium enterprise. But you'd like to take it to the next level. Now, whether you are the person to take it to the next level or you need the right person to step in and help you take it to the next level, that's not really important right at the moment. I'm just wanting to talk about who you are and where you want to go. You may not have the energy to take it to the next level, and that's okay. You may have the energy but not have the expertise, and that's okay. Or you may have some of the expertise and some of the energy but not have the capital. We can help you with all of these things, and we'll talk about that as we go through this. So there's really what's called this $4 trillion private equity food chain, and it's really how you can grab as much of it as you can. So let me kind of walk you through what we call this food chain. At the top here, you have these public companies, right? They're the big sharks. They're out there, and they're earning 12 to 15 times earnings, and that's what they will typically gobble up a smaller company at a 12 to 15 times its profit, essentially. Merger and acquisition firms, which are your M&A companies, and let me get my mouse to work here a little bit. There we go. These merger and acquisition companies, they typically buy companies at the 8 to 12 range, and then you have private equity groups, right? And they'll buy typically at a 5 to 8. And then most companies are here and they're selling in the 1 to 3 range, which sells to either smaller private equity companies or more to an individual company or the competitor who wants to buy them for consolidation or strategic purposes. So those are different ranges of where companies are selling for. And this will become important as we talk about what you can do with your company and who you may want to sell it to somewhere down the road. Now, it doesn't mean that you have to sell it today, but I want you to think about what you could be doing with your company down the road. If you can get it to a certain dollar level, what happens as you hit these different mile markers or milestones and what it means to your valuation. And I'll walk you through some different examples of that. So we also have something that's called the sucker or the stockholder. Well, the stockholder is an individual or a company or even a pension plan that typically pays 25 to 30 times the multiple of the company's profits the next day after a company actually goes public or is bought out by another company or merged with another company. And it usually takes that individual or that entity 20 plus years of holding on to that stock in order to truly get a really high rate of return from the earnings alone. And there's also what's called a high risk of failure for the stockholder, because we see the stocks that go up and down, and typically most people don't make any money by doing stocks. But it also brings this image to mind of Gordon Gekko from the movie Wall Street. You may remember this from years ago. It's an interesting movie where they're essentially playing the stock market game. Well, public companies buy growth at a 12 to 15 multiple, but they turn around and they sell it to the stockholder who invests in them at a 25 to 30 multiple. So they have that instant spread. So to them, when they look at buying a company at 12 to 15 times its earnings, that's cheap, because they know instantly 24 hours later they're going to take that revenue, that profit that comes in to that company, that customer list, the technology, whatever it is that comes into their company, and they're going to be able to turn around and have a valuation of 25 to 30. So it makes sense for them to gobble up other companies. And right now there's over $4 trillion and that's really sitting on the sidelines waiting to invest in companies. So they have to meet certain expectations, and they have to have an instant way to double their money, which is what they do. They buy 12 or 15, and they turn around and they sell it to the stockholder, you and me, on the open market at 25 to 30. Merger and acquisition firms, they buy smaller companies, typically in the 8 to 12 range, and what they do is they aggregate a bunch of these smaller, let's say $10 million companies into a $100 million portfolio, and then they sell that off to a Wall Street firm in order to increase its multiple there. So they buy at 8 to 12 and they sell at 12 to 15 to the public company, who then turns around and sells it to the stockholder at 25 to 30. Private equity firms typically buy to aggregate a couple different companies together, and they'll buy most of the time somewhere in that 5 to 8 times the earnings. Sometimes they don't use any cash to do it. Sometimes they stock swap in order to do that. Private firms, which is more likely what we do, more of what we do, I should say, will typically buy a small to medium enterprise somewhere in that 1 to 3 time earnings range. Now, it depends on what the company needs. Sometimes it's a stock swap. Sometimes it's a model where we can assist the company to take it to the next level. And I will explain these in detail as we go along. Now, the merger and acquisition field, this is what's called a seller's market, where businesses often sell to the highest bidder. Again, it's that $4 trillion market that's available. Well, and this is the amount of money that companies wish they could spend buying other companies' cash flow. And that was just in 2016. There's $4 trillion sitting on the sidelines waiting to gobble up companies. Well, I'm going to be sharing with you today what we call 3 forms of exit. Now, there's lots of different strategies that you can use to exit out of a company, but I'm going to share with you 3 of the main ones that we specialize in that I think you're going to like a lot. More than likely, one of these 3 will fit what you want to do. So our first one is something that's called our partner for growth. I'll explain these in detail. The second one is called a straight sale. And the third one is what we refer to as our hybrid IPO/merger model. And let me break it down and show you how we actually do this, right? So how do we make these companies grow? And how do we go about the process? Well, the first part, step one, is we find companies who want to grow, and we show them this kind of a presentation, and we show them what happens. Because for most companies, they're in what's called no man's land, where they can't figure out how to make their company 5, 10, 15, 20 times larger than what it is, because they just don't have the skill set to take it to the next level. In fact, most companies get stuck in one of these four, sometimes all four of these different ways I'm about to share with you. So what I'd like to do as I go through this, I'd like you to think about where you are in your business. Does this seem like it's you? Does this fit you at all? And maybe all four, maybe just one. I don't know, but I suspect you'll fit into one of these four. So the first thing is a reason of why companies get stuck and they can't get it to the next level is something that's called lack of marketing. And this, in fact, is the number one killer of small business growth, because companies generally don't know how to market. Some companies simply subsist on referrals. Well, you cannot scale a business based off of referrals, right? We're not talking about MLM companies. We're talking about good, solid companies just like yours that have good ideas, good people, and you want to take it to the next level. Well, if you don't know how to market, guess what? You're kind of dead in the water. And what's the one thing that most companies do when they have a slight downturn in the market and their business isn't there? What's the first thing that they cut off? They're spending for marketing. Because the challenge is they don't know how to market, so they cut that out first because they can't tell whether or not it's making them any money or not. The second area where companies get stuck is something that's called a lack of talent. Well, the top people usually work for companies that are growing. So in every company, you have what's called your A, B, and your C players. Well, in a company that's starting to have a little bit of a problem, who do you think are the first people to leave? Your A players, your B players, or your C players? You're right. It's the A players. They're the first ones that actually leave the business. And who's the one, or which type of employee stays on to the very end till the doors are actually closed? What's your C-level people, the folks that they look at, hey, I'm getting paid hourly, and they want to come in late, and they want to leave early, and they want to take long time or long lunches, and they have all these entitlement issues. Well, those people typically stay or the longest. So having the right people helps your company grow. You may find yourself in that situation right now that you just don't know where to go find the right kinds of people. And I will tell you that as part of our private equity companies, we have over 300 C-level type executives who are already familiar with taking companies from where they were and quantum growing that company to the next level that really takes them from 1 million to 10 million or 5 million to 15 million, something like that. And what I mean by C-level executives, I mean CEO, CMO, CTO, CFO, COO, all of those C-type level executives who already have the vetted experience. The third area that companies get stuck is something that's called lack of systems. This usually comes with good people, and it's crucial to scale. And what I mean by systems is automation. If you can't automate your selling process in your business, whatever it may be, you can't actually scale the business. Every company that we work with that we help make successful, we have to get the right kind of marketing in, the right kind of people, and we have to put the systems into place so that it doesn't depend solely on people in order to run, that we automate as much of it as possible, and we just turn on the faucet to drive the business leads into the business, regardless of what industry it's in, so that we get the number of clients and number of sales. The fourth area that companies get stuck is a lack of capital. Now, we can bring in capital. We have over $120 million in funding available to help companies grow. But the challenge is we only use that money to fund the growth after we take care of number one, number two, and number three. So we have to fix the marketing, get the right people, and put in the automation systems. And what we found is that when we do the marketing first, the talent second, the systems third, it actually frees up the capital. Most companies, when we talk to them, say, hey, what do you need in order to triple your company in the next 3 years? And like I saw some folks that answered her, they said, I need a bunch of money. And some people gave me a specific amount of money, what they need. But I bet you if we actually focused on fixing your marketing and your conversion so that you actually get sales from the people that are actually coming into your system, you get the right people to manage it all, and then you scale that business, it will free up the capital. Most people, or most companies, I should say, go about this backwards. They want the capital so they can invest in the system, then they hire the right people, and then they improve their marketing. They go about it backwards. When if you do with our model, you fix your marketing, then you get the people, then you do the automation, it frees up the money. Pretty simple. So marketing is what we actually call the lifeblood of every growing business. And let me explain to you why Timmy can't do marketing. So the marketing options for most business owners is one, you can learn to do it yourself, and in a couple of years you could be pretty good at it, but by then the market's actually kind of changed. Two, you could actually hire it done, but what we found is the real marketing strategists, the really good ones, they don't work for a paycheck, right? Your consultants that come in and say, oh, here's what you do, and they give you an idea, but they don't have any vested interest in your success. You're not going to get the good ones who don't have, or the good ones will have a vested interest in your success. And the third way is to partner, and that's the only real option for most businesses because you want somebody that can actually have a vested interest in your success. In other words, they ride right along with you. If you don't make money, they're not making money. And that's the best type of marketing person to bring into your company. And there's really only three ways. There's only three ways known to man to grow any business. The first one is you have to get more customers. Now, we leverage 34 methods of getting customers. Let me go through and just give you a few of them. One, we do something that's called trade show marketing, all right, where you can take products out trade show. Now, this may fit into you, it may not. I'm going to give you a lot of different things that we look at in every company that we approach to help take their business to the next level. So you may fit into one or some of these, or sometimes all of these. It just depends on where you are in your business. We also look at joint ventures, running Facebook ads. It's interesting to me, by the way. Let's just talk about Facebook ads for a second. And it doesn't matter what industry you're in. I bet you we could find you clients on Facebook. And when I ask businesses, have you run Facebook ads? Sometimes they'll say yes, sometimes they say no. And when they say yes, they typically say, yes, I've tried running Facebook ads and it doesn't work. Well, I have to argue with them a little bit because it's not that Facebook didn't work. It's, well, okay, did your ad have what's called a message to market match? Meaning, did your ad match the people that you were actually trying to run the ad to? And did your ad, when they click on the ad and they go to your website, did those two things match up? Because if there's a disconnect between the ad and the page that they go to, if that doesn't match up, people won't respond. And then did your ad actually convert? In other words, how many clicks did you get on your ad? How many people went to the page? And how many people bought or opted into your program or offer or service or whatever it is that you were offering? Well, most companies can't tell me what those statistics are. And guess what? If you don't know what they are, you're just guessing. You're doing a shotgun method where you throw a couple $1,000 out there and you hope your business will generate some leads and get some sales for whatever product or service you have. And you sit back and you just pray. Well, you know what? We don't pray. We know everything because if you can't measure it, you can't test it. And we test everything. Another method is doing direct mail postcards. Now, collectively, we've done almost 30 million pieces of direct mail in just the last 10 years alone. So we've done a lot of direct mail. We're very familiar with what works and what doesn't work across different industries. And sometimes we take what works in one industry and we put it into another industry. All of a sudden, it's like it just blows that market up because they're not used to seeing something like that. It's a different approach for them. So we can do direct mail or online advertising as well. Groupon or Google AdWords, search engine optimization, social media marketing. These are all theirs. We have something that's called bounce back offers. We work in different channels like Amazon, Sears, Overstock, Newegg. There's YouTube marketing. There's display advertising on YouTube marketing. You got LinkedIn and Meetup, power referrals, trade publications, and mobile marketing. By the way, mobile marketing is getting bigger than everything. So if you're not set to advertise on mobile, regardless of the product or service that you have, you're going to be missing the boat. You need to be on top of that. So this might give you an idea as to why we can typically triple new customer acquisition in about 90 days or less. The second way that we work on doing things is we raise the profit per sale. Now we leverage three very big methods of increasing your average transaction value. The first way is we do something that's called immediate upselling. This is essentially the model that McDonald's uses so that when you go in to McDonald's and you order whatever it is, they always ask you, and they are trained again and again and again, that no matter what you say, they ask you, would you like fries with that? And you're kind of smiling, I'm sure, right? You think about it. And by the way, if you want to have a little fun and you want to screw with the person that's at the counter, walk in and order some fries and nothing else and see what they do. It kind of messes up their pattern because they want to ask you, do you want fries with that? And you already ordered just the fries. So you can have a little bit of fun. But anyway, you get the idea, right? So one of the things, and I'll talk about McDonald's a little bit more, is you take a product, you already have the customer in-house, it's what else are you selling? Well, too many companies only have one product or service. Well, what if you were to sell your competitor's product after they bought yours, but you now sold them whatever this additional product or add-on product that they have to it, right? That's something that we actually call cross-selling. This is what Amazon does, and Amazon is the biggest gorilla on the block that does this. And they do this with something, and you've seen this when you go to Amazon. Now, and let me just be clear for a second. Google is the number one search engine in the world. Amazon is the number one buyer engine in the world. You only go to Amazon when you do what? You want to buy something. You don't go search on Amazon for stuff that you're looking around. You do that on Google. Then you go over to Amazon, you go buy it. Well, Amazon's gotten very good at the item that you want to buy. Down below, they'll list a couple of other products. Say, well, people that bought the item you're looking at also bought this and this and this, and then they will bundle stuff together. And that's the third way where Amazon does it, as well as you've seen this with phone and cable and internet, where they'll say, hey, buy this cable package, and we'll include these channels, and then we'll add your phone in here, and you can get your internet, and they bundle it all together because they know the cost of getting you in the door they broke even on, and everything else that they add to that is a profit. And let me give you an example of what I mean by this. Let's break it down to the McDonald's example. McDonald's spends $1.91 to get a person in the drive-thru, to get them in the door. So they're making 18 cents profit on a $2.09 burger. However, every time they say, hey, would you like fries with that? Would you like to bundle that together and get a combo meal? Or would you like to biggie size your fries and your soda? Well, they make another $1.77 in profit on the fries and the Coke as an add-on. So guess what? Their overall profit's $1.32 just in profit, which is 8 times the cost of that core sale. So they made way times more than that. So think about it, just by bundling other stuff. And it's a very simple example, but what I want you to think about is what could you be doing in your business that you could add on other products? And it may be your stuff that you own, or it could be somebody else's. I know some people get very resistive selling other people's stuff. But if you don't have to do the fulfillment, you don't have to do production, you don't have to do the customer service, and yet you get a large chunk of change for selling that other product, and you've already sold your core product or service, wouldn't it make sense? Most people nod their head and say, yeah, it actually does make sense. So this is why we can also triple the transaction profits in about 90 days or less. Now, the third way is to increase the frequency. And we leverage 4 big methods of increasing the frequency with each of your customers every time they buy. In other words, how often do they buy from you? So we do this with something that's called boomerang marketing. Now, we have to have constant contact with the consumer or the business that buys from us. So this would either be direct mail, email, newsletter, phone, text messaging, social media, and even retargeting to those folks. So retargeting, if you've never heard that before, it's where, let's say that you go to a website for whatever the product or service is, and you look at it and you don't buy that product. And now you go over to CNN, and just as a website, you go to CNN and you see an ad that promotes the website that you were just at. And then you go over to MSN, or you go to Amazon, whatever, and you start to see ads for that website that you just visited. Well, that's what's called retargeting. They follow you around the internet on every site that you go to, and they essentially target ads until you come back and you buy. So if you're not doing that or doing it properly, you're missing out. We also have something that's called loyalty programs. These could be VIP promotions, frequency discounts. Hey, you come in, you buy 8 or buy 10, get the 11th one free by giving free merchandise or incentivized referrals. For instance, DirecTV will pay $100 if you bring in a couple of friends who sign up for DirecTV. That's an incentivized referral. We also have something that's called continuity billing. Continuity billing is one of the best things going. It's almost as good as compound interest. So it's what we call adding auto billing solutions to every order that somebody has, so that if somebody buys a product or a service from you, that they automatically get charged at the first of every single month. It allows you to even out your cash flow, so you don't have those big ups and downs, especially in a cyclical market. And you can add continuity billing to almost any type of business. And you name it, we could probably add a continuity billing to it in some form or fashion. We also have something that's called line extensions. This is essentially selling more of what your customers buy, and you do that through other joint ventures. It's kind of like that Amazon model where people who bought this also bought this and this and this, so you can sell things through joint ventures. And this is why I'm sure you can see why we typically triple how often customers come back to your business to actually buy from you again and again. So the good part is this. We're going to get into something of what we call the magical math of business growth. And this only exists in business. And I absolutely love this. I refer to this also as my 3x3x3 matrix. So I'm going to explain the 3x3x3 and as we go through this here on the next chart. So when we want to grow a business, I look at how can I dynamically grow a business. I don't want the business to get 5, 10, or even 50% growth per year. I want to triple it. Now, your business can probably do the same thing. Let's simplify this, though, and break it down. So let's say that you have a company that sells a product or service that generates $1,000 in profit per day. If we get 3 times more customers using some of the things we just talked about, that's getting $3,000 a day in sales instead of $1,000. Now, if we triple the profit per sale by having all these add-ons, we're now up to $9,000. And if we increase the frequency of how often they come back and buy from us again, we're now to $27,000. So a company that's normally doing $1,000 a day or $365,000 a year, and it's worth less than $1 million in valuation, well, what would it be, or what would you guess at this company if we've done the 3 things that I mentioned above here, right? These 3, the frequency, the number of customers, the profit per sale, and the frequency. When we add those into a company, what do you think this company would be worth in 6 months? Just take a guess. I'm going to give you the number, but take a guess. You're probably off by quite a bit. And let me tell you what the number is. It's actually $9,855,000. So let's say that you own that original company doing $365,000 a year. And you're doing that in sales, and we bought it at a 1 time the multiple of the gross sales, which is pretty common for smaller companies. And let's say we then turned around, we implemented those strategies to grow the company, we put our teams in a place to make it happen. Now we want to sell it just 24 months later, so let's assume I sell it for the same multiple of 1x because we've increased the business dramatically. It will sell for around 3x in reality because we increased the profits of the business. So somebody's willing to pay a premium for it. We could turn around and sell that company for $9,855,000 versus what we bought it from you for, $365,000. I mean, that's a pretty good profit, I think you would agree. And moreover, we're just getting started. So let me just say this. A new valuation on that same company actually has it at a little over $12 million. Now, let's just say this. Let's say we partnered with you to grow the company and we just did a 50-50 split on doing the growth. So let's look at your choices. You could keep 100% of that $365,000 sale if you sold it outright, or you could get half of the new valuation, which in this case, come on, mouse, there we go, is $6 million. We'd get $6 million and you'd get $6 million. That's pretty good by simply partnering with us. So which would you choose? Would you delay the sale of your company for just a short, let's say 2 or maybe even 3 years for an extra $4 million in profit on your business or more? Actually, it's like $5.5 million, I should say. And so even if, let's just say, even if you got just 10% of this right and you 3x your business, but you're not selling it at a 10 multiple, you still profit more than you could possibly imagine. And I know that some of you think, well, gosh, Mike, 27 multiple there, that's a little bit unbelievable. And you know what? I used to think that myself. It works, but I know it's actually hard to believe. So I do get where you're coming from, but just think if you just did a fraction of what we've been talking about, even using just some of the things we talked about. And by the way, I'm not covering everything because we don't have enough time to talk about all the different things that we do for businesses. So I want to take a second and talk about the model of what we call our partner for growth model, right? Which is a different way for you to exit. In a partner for growth, we step in and we help you grow. I'll cover that in just a second. And the goal is to ultimately sell the business down the road. So I'm sure you've seen a show, or you've at least heard about this TV show called The Profit with Marcus Lemonis. And what Marcus does, he goes in there and he helps the companies turn around, and they, for drama, they do all this stuff embarrassing to the owners on TV, and there's some heartache that goes on, but he goes in there and tries to turn them around. And I bet some of you would love to have Marcus Lemonis come into your company and help you turn it around. Well, unfortunately, that's probably not going to happen. However, we as a private equity group can get you even better results without embarrassing you on a national TV. So, we do it. We're not going to embarrass you at all, but we will have frank discussions with you to make your company grow. You have to decide where you want it to be. Do you want this thing to finally get to the next level? Because sometimes you could be the solution and sometimes you could be the problem. I don't know which one it is. You have to decide which one that is. So let me talk about our partner for growth model for a second. This is one that we do with a lot of different companies, especially the small to medium enterprise companies. We use our 3x3 matrix model to grow the company. So we partner with you to grow the company. You stay in complete control of the company. Come on, mouse. It's not working. There we go. You stay in complete control of the company. We have a future sale of the company, or you could do it as IPO. So I want you to know that if we do this Partner for Growth model with you, our goal is to sell the company or to be bought out. Now, we may elect to stay in the company and grow it longer because it's growing really, really fast. Our model is we want to at least triple the profits of your company, and we want to do that in under 2 years. That's our model. Sometimes we hit that in under 12 months, but you can do it faster. So here's an example, right? We did this with a financial agency. We assisted them in creating marketing funnels, helping them with other marketing, creating a sales floor, doing automation, and we doubled their profits, and we did that in just the first 8 months of that company. Another model that you can use is what we call our sale today model. In this model, you're actually selling a company, so you get to get out of the company. You could stay in and have a percentage of ownership in the company, so you may decide to sell 100% of it. You may decide to sell 70% of it. It depends on what you need. So you get anywhere from 10 to 30% in cash. You actually do what's called a 70-90% seller carry, where we actually will help you get a monthly payment on the balance. The business becomes a collateral. You stay involved in the business. You get to see exactly what we do to grow the business, and you get some of that equity kicker at the end. So you get to share in that possible upside growth, and you also have that profit sharing as we grow that company. Now, here's a company. We did a Colorado marketing agency where we stepped in, we bought them out. The owner stayed in for a percentage of ownership. We revamped the company operations. We established new lines of credit to even out the cyclical time periods. We built sales teams and funnels, streamlined it all, and we tripled their profits in 19 months. So we did it in under 2 years. So we also have something that's called our hybrid IPO merger model. Now, this is where it gets really exciting. If you've ever thought about wanting to take your company public, but you don't want to go through the financial risk of doing it, you don't want to spend the money, you don't want to be on charge of some public board and talking with legal, the SEC or market makers or brokers and explaining what you're doing with the company, you don't want to do that, this is the perfect model for you. What we need are companies that can get their profit to $500,000 a year in profit. They also have to have good reputations and future growth potential. In other words, can we still triple your company and do everything we just talked about? Can we help you take it to the next level? Well, what you get to do is you get to merge with a publicly traded company that's essentially a holding company. They will essentially buy you at a 5 to 6 multiple of your profit. So let's say, for example's sake, that you are doing this 500,000. Multiply 5 times or 6 times 500,000, you're looking at getting $3 million valuation on the business. Now, if you think that your business is worth a lot more than that, okay, cool. Good luck with that. Good luck with getting it. What I'm providing with you here in the hybrid IPO merger model is a way for you to create what's called a liquidity event, meaning you get to swap your privately held shares with company or publicly traded stock shares so that you actually have stock that could be borrowed against. You could give it to your kids, your family, you give it to charity, you can do whatever you want, but you actually have liquidity in your stock. And that's the biggest thing that most owners of small to medium enterprise companies is they can't access the value of their company. Even when you go to a bank and you try to borrow money, well, the bank's not going to really lend you much, but when you can show that you are actually publicly traded, everything changes. You can now also use your publicly traded stock to go up and gobble your competitors, which is the fastest way to grow your company, is to go and buy your competitors or other companies and take all of their sales, all of their marketing, their technology, bring it in-house, and you have instant access to that. It's the same reason, the same thing that other publicly traded companies that have this $4 trillion in cash sitting on the sidelines, they're buying at that 12 to 15 multiple for other smaller companies, and they're turning around and trading that to the stockholder at that 25 to 30 multiple. Hopefully you all remember that. Well, you're able to go in and buy these companies at 1 to 3, sometimes a 4 or 5 multiple, depending upon what the company is and their valuation. And guess what? You can bring all that cash right into your business, and it just flows up and makes everybody much more profitable. So what happens in this model is when you do this essential stock swap model, you get 10 to 20% of the valuation of your company. You get that in cash. The remainder goes, that 80 to 90% is given to you in stock of the publicly traded company. Now that stock is what's called, it's held in reserve or locked up. You can't sell it for 360 days. The reason for that is the holding company, the publicly traded company, does not want you to sell that stock right away as soon as you do it, because it's like you sell it and you turn around and you dump your stock. So any type of an IPO, the founders of the company, the insiders, are restricted from selling their stock so that it doesn't cause a massive decline in the stock price and hurt the stockholder who's paid a premium for it. So the stock gets locked up for 360 days, and then after 360 days, you could sell all of it, you could sell some of it. Most people choose to hold on to it because you're looking at building the value of your company. So this is for folks that say, I want to grow my company, I want to create liquidity in my company today, but I don't want to necessarily get out of it. I don't want to sell it, but I want to see the value of my company to grow. So you get a cash in today at that future sale price. You get profit sharing of the business as it moves along, as well as what the overall holding company does, and all the different companies going into that particular holding company. And the goal is to put 100 different companies into that, of which you would be essentially one of 100. And you also get to stay in full control. Now, this is very important. The holding company doesn't want to tell you how to run your company. You do that. You do everything that you did. So essentially 24 hours from when you were privately held to when you now become essentially public through this IPO merger model, you continue to run your company the same way. The difference is in that 24-hour period, you're now public versus private. You don't have to worry about dealing with the SEC or dealing with the market makers or dealing with public relations. The holding company does all of that for you. That's the whole idea. So you stay in full control of your company. You still pay yourself a salary. You still control your benefits. You still control which employees you want to hire. You still control the direction of your company and how it moves forward. So this is a great way for a business owner, if you're in this model, and the types of companies that we're looking for, and you're doing $500,000 a year or more in profit, this is something we'd like to talk to you about, because it's a great way for you to create that liquidity event, create that value that you already see in your company, but you have no way to tap into it. And yet you can stay in full control and grow your company for as long as you want. So this is an international marketing agency that went public in the hybrid IPO model. They did a strike price at 4.15 euros and essentially had an $18 million or 18 million euro, which is slightly higher than the US dollar, valuation. So it's an example of companies that we do. So let's talk about what we call the buyer's ecosystem. I'm going to get into that. So it's what we call really the better part of who really wants to buy your company. Remember, I talked about private equity firms, which like to buy in that 3 to 6 multiple. Merger and acquisition companies will pay a little bit more, 8 to 12 multiple. And you got the public companies who buy in that 12 to 15 multiple, but they have to meet certain street expectations, and they then have an instant way to double their money by selling who? To the stockholder or the sucker that pays 25 to 30. Now, to the average person who doesn't have the inside track on which companies are doing what, this is still a good value for them, but I think you're starting to see that when you're on that inside track, before you can take it public, it makes a big difference on where you start in this life cycle. And the average stockholder usually takes 20 plus years of holding to ROI from just the earnings alone, and it has that high risk of failure. Again, it goes back to this $4 trillion of money that's sitting on the sidelines with these public companies that wish they could spend by buying other companies' cash flow. And this is why it's so easy to sell your business when it doesn't actually have to get up to the 10 million. If you're at $500,000 in profit a year, and you could be doing 600,000 in gross sales but doing $500,000 in profit, well, guess what? We could still do that hybrid IPO merger model. And this whole merger and acquisition model, and this field is really a seller's market where the businesses often sell to the highest bidder if you know how to structure your company so that it's attractive to other buyers and know who to actually sell it to. So one of the things that we do when we look at a company that we want to partner with in this model for that future sale is we want to figure out who our potential buyer is in the future, and then we want to structure the company so that it is the perfect acquisition for that company and they will pay a premium for it. Let me give you an example. You've all heard of Facebook, and you probably heard of an app called WhatsApp. Now, why did Facebook spend $19 billion for an app that was only generating around $20 million a year in revenue. Why would they pay such a massive premium? Because the merger and acquisition firm that structured that deal knew that Facebook wanted eyeballs. They wanted marketing eyeballs so that they could run ads to. And guess what? WhatsApp had 500 million eyeballs or customers that were using their application on a regular basis, so Facebook was willing to pay a premium. So when you have the inside track of knowing, hey, we got this great app and we know we have a customer or a potential buyer that is willing to pay a premium for it, and what did Facebook do? They used their publicly traded stock to acquire it at a multiple that still made sense to them because of what they could generate in advertising revenue. So just wanted to kind of give you a little idea of that. And we've really specialized in companies from that $500 to $20 million range. We've worked with companies that are smaller, but in that scenario, we'll do a partner for growth model. So if you have a smaller company, you're not out of it. Don't consider that. We will look at all companies. In fact, the smallest company we ever did was doing $105,000 a year in gross revenue. However, it was doing $90-something thousand in profit per year and had really good growth potential. They just didn't know how to market. So we could do deals very, very small, but we prefer in the $500,000 to $20 million range. So there's even more. I want to share some more things with you. So we have 4 of the world's most brilliant marketers on our team. We have in-house legal, accounting, HR, and project management. We have import and export departments with offices in the United States, UK, and in Asia. And we have some award-winning technology and web teams, social media, and a whole lot more. And we also have all the capital you ever need to fund your growth. So here's a question for you. Are you happy where you are, or would you rather have a smaller piece of a much bigger pie? Think about that. Right? Is it better to own it all and keep it all privately? And I got my little rice bowl of power, and you're in control. Or would you rather have a smaller piece of a much bigger pie when that company that you have turns into the company that you've always dreamed it could be? Simple question. So there's some hidden benefits here, right? You get to work less, you get to spend more time with family, you just get to do the parts that you enjoy, and you get to create legacy, and you get to give back. So the transformation that you get, let's look at this before and after. Before, you have stress and overwhelm. Then you may see yourself in a bunch of this. You're doing most everything yourself in the business. You're working at 50 plus hours a week. You're overworked operator of your business. And then after you use some of the processes that we're talking about here, and you work with us and you partner with us to grow the business, you have double your free time. You do only the parts of the business that you enjoy and you're excited about it. You're spending time with your family and your health improves. You're a respected leader and an owner in your business and in your marketplace. And without this, you know what? I'm going to say a couple things that you're not going to like to hear, but it's true. And the reason that I say some of these things here is because we've seen it with some of the owners that we've either worked this with, that they had it previous to us coming in, or because they didn't want to work with us and they wanted to do it totally on their own because they wanted to stay in 100% control and not have anybody help them because they thought they could do it all on their own. Well, this is some of the things that happen. So there are a couple things I'm going to say here. I'll just give you kind of like that little warning that you'll see on some TVs or on a TV show. So you could continue to suffer from stress and overwhelm. You could lose the intimacy in your relationships, and you could wind up divorced. I've seen that many, many times. You could lose half of your net worth or more. And, here's one that I saw a couple times, and, it just hurt. You could have another man or woman raising your child. Because when that divorce happens, because of financial reasons are the thing that cause the majority of divorces in the world because of money. Because people don't know how to really work it properly. So what is it that we're looking for? Let me just be really simple. You're invited to join us if you need any of the following things here. You need something that's called financial reengineering, meaning that you have a company, it was profitable, but you're running into issues where you don't know how to manage the cash flow properly. You got creditors calling, you know what, we can step in, we can bring in the capital, we can rework everything, create the space that you need to get back on the feet and really make the company profitable again. We've done that time and time again. Even if you have overdue bills, you have lawsuits, we've stepped in and we've settled those things for pennies on the dollar because we'll bring in the cash, wipe out the debt, and the valuation of the company goes up instantly. If you need to partner with other companies for growth, if you're looking to acquire and get your equity in other companies, If you're looking for legal or accounting structure, you need capital for acquisition or expansion, or you're looking to triple your profits with our 3x3x3 matrix, the model I talked about. If you're looking at doing importing or other cost reduction, or you're looking at ongoing hands-off management, or you want to sell and exit for the highest price, or you're looking for cash today and cash tomorrow, we can help you with that. Or if you want to even go public through that hybrid IPO merger model, where you're not at the very top there dealing with everybody and all that legal stuff that they have to deal with when you go public. And by the way, I have to tell you, just for a moment here, when you were doing mergers or IPOs, the old model used to be, even if you were doing a reverse merger, you had to have at least $3 million in profit and be doing about $10 million a year in gross sales or more. Well, now with this new hybrid IPO merger model, you don't have to do that. You only need to be making about $500,000 a year or more, and guess what? You can get all the benefits without the hassles, and there's no money to you up front in order to do that model. So let me kind of review some of the three forms of exit that I talked about. We had our partner for growth model, which included that 3x3x3 matrix. You had your straight sale, or you also had your hybrid IPO merger. Those were the three forms of exit that I've talked about here today. And I'll tell you this, we're only looking for 5 companies that we can work with. The demand from our investors is very high for the merger and IPO model, so we only do 1 or 2 of those every quarter or so, and we're very selective about who we choose with. And so we have limited bandwidth to help you scale your business. We only buy a few of the best deals a year or partner with companies because we want people who are really motivated to take their company to the next level. They see what I'm talking about here and they say, you know what, I want to be part of that. Help me. I'm more than willing to take a smaller piece of a much bigger pie because that bigger pie is so much more than they ever had already. So we can help you with that. So let me tell you what's next. Here's what you need to do. Down below, you're going to see a link on our page where you can go out and fill out an application. You're going to get our resource guide on what's called growth hacking for your company. So it's an extra bonus that you're going to get just for filling out the applications. We're going to give you some more training on what you need to do in order to triple the profits of your company. So you'll also schedule a time to talk privately about your company. So fill out the application, get our resource guide on growth hacking. You get that bonus there. And schedule a time and let's talk one-on-one with you about your company and what's the best way to take care of your company with what you have available right now and where you want to go. It's 100% confidential. We don't share with it and we don't force anything down your throat. We just share different ideas and strategies with you. If you want it just to get some more education, we're happy to talk to you about your company. So let's talk about what this will do for you. You can end the stress and overwhelm you've been feeling because you've been operating your business without systems. You'll scale and grow your business to hit your income goals in the next 60 to 90 days. You'll double or triple your free time to spend with family or doing the things that you love while being healthy. I can't tell you how many business owners we've run into where their health suffered because they were just slaving away in their company, having that job. Even though they're business owner, they felt that they were working so hard just to keep everybody else employed, and they're trying to figure out, why am I doing this? Everybody else seems to be making more money, have more free time, and they're slaving away, and they lose their family. They lose their wife or their husband, their kids, because they spent so much time working in the business rather than working on it. Don't you think it's time that you did something different yourself? Because I suspect that you probably see yourself in some of this, otherwise you wouldn't be here today. So at our company, this is what we do. We help you take it to the next level. So really, all you have to do is just click on the link below to get started, get your free bonuses, fill out the application, and let us talk to you one-on-one. There's no pressure. We're not selling you anything here, so there's nothing to buy. It's just free information. But the only way that you can access some of the bonuses that I talked about, as well as get more information, is you have to fill out the application. So just look on this page here where you're watching this. Click on the link. There should be a link that's popped up for you. Click on that link, fill out the basic application, tell us who you are, tell us a little bit about the company, and let's schedule a one-on-one 100% confidential call with you. And if you need us to sign a non-disclosure agreement, we're happy to do that before we talk about anything. If you just want to talk about generalities, we can. And if you want to get into specifics after that, we will sign a non-disclosure agreement, because we're not looking to do anything with your information. We just want to help you take your business to the level where you've always known it could be and where it deserved to be, but you're just not there yet. So how do you get there? and then how do you exit out of your company and still get the benefits that you see from it. So you may want to do the partner for growth model. You may want to just do a straight sale, or you may want to do the hybrid IPO merger model. I'm not sure, but let's sit down and talk with you one-on-one. So again, the next step is to just click on the link, fill out the application. After you fill out the application, it's going to take you to a page where you can actually schedule a call and actually choose the time that suits your schedule, not ours. It's on your schedule, so you actually get to schedule it, and they'll take you to a page where you can actually get the bonuses right after that. So I just want to let you know what to expect. So first is the application, then you choose a time, and then you get the bonuses. So with that, I want to thank you again for being on this call and this training with me today. I look forward to speaking with you personally. Some of you I will speak with you personally. Some of you will talk with either the CFO or the CEO in our company, depending upon what your needs are. You'll see that in the application. There are different questions. So we'll put different experts to talk with you based on your individual needs. So I hope you've really got a lot out of this. And by the way, if you're with me here, and since I'm still talking, would you please use your chat box there and tell me what you thought about this webinar? Was this helpful? Did it give a little bit of insight to you? Are you interested in, just tell me, are you interested in any of the three models that I talked about? I'd love to just see some of your feedback, and I see some people are already writing in. Yes, everybody seems to like it. Very informative, they say. Loved it. Wow, got a couple of wows in there. That's cool. And yeah, I'm seeing folks that see, yes, they're smaller. They say they want the partner for growth. There's two people that want to do the hybrid model, the hybrid IPO merger. That's cool. And a couple people want to sell, and there's one here that says actually wants to sell, but not right now, wants to do it in about 6 months. That's cool. But you know what? Call us, or rather fill out the application. Let's talk about it so that you can put your business in a position so you can get top dollar for it even 6 months from now. And we'd still be interested in talking to you about being the buyer for the company or assisting in selling it to the right kind of buyer who pay you a much higher premium. So yeah, everybody, thank you very much for the feedback there. Appreciate that as well. Okay, so we're going to wrap it up for today. We're all done for right now. I want to thank you all. I know I do see some questions that are coming in people have, and the best way for us to answer those questions is one-on-one with you. So just fill out the application. We will call you and we'll answer all of your questions. It's really that simple. Trying to type it out here or just talk, we'll be here for hours answering some of the questions that I see that are coming in, and we can't do that right here. This is not the right place, but let us do that with you one-on-one. So just fill out the application. Get started with that, and we'll schedule a call with you. Rather, you schedule the call that we're going to have with you, and we'll talk to you one-on-one and answer all of those questions right there one-on-one in a confidential manner. So again, thank you, everybody. Appreciate you being on this training with you. Again, my name's Mike Warren, and I look forward to talking with you soon. Bye for now.